Does your spouse have bad credit? That doesn't have to keep you from buying a home. I'm Amanda Ray with Guild Mortgage, and I get this question all the time about buying a house with your spouse or without your spouse if they have bad credit. So let's break this down, and I'll kind of tell you all the things that we might think about as a lender. So say you have really good credit, your spouse has really bad credit. Don't worry, we can help them fix their credit if they do, so we'll talk about that. But you have good credit, they have bad credit. Is it better to buy a house together? Is it better to buy a house separate? I don't know. So here's the recommendation that I always make. Let's get both of your information to start, and then that way we can pick and choose. Do we keep you both on there? Do we take one of you off? I know sometimes people think that if they apply for a loan in a certain way, and then we don't like it as a lender, we can't tweak it, but we can. For example, say you guys apply together and your spouse's credit is not good enough to be on the loan, it's not high enough, we can always take them off. It's not gonna automatically disqualify you. I happen to be in Nevada, which is a community property state. So one really important thing to note about being in a community property state is we, for certain types of loans, FHA, VA, USDA, those government loans, even if your spouse isn't on the mortgage with you, we still have to actually check their credit. So their credit score doesn't matter. Say they have like a 400 or 500 credit score, that part doesn't matter. But what does matter is their debt. We're gonna look at all of their debts, their collections, their monthly payments, and that's gonna affect how much you qualify for when you're buying the house, even if they're not on the mortgage with you, because in a community property state, their debts are also your debts. Their assets are your assets. It's all kind of blended together. So if you have a spouse that has bad credit, their credit score might not impact you, but their debt will if you're using an FHA, a VA, or a USDA loan. Now, if you use a conventional loan, we don't have to look at their credit at all if they're not gonna be on the mortgage. So that could be one thing that we decide to do if your spouse has bad credit and also a lot of debt and we aren't putting them on there. Here's one thing that shocks people. They think that even if their spouse isn't on the loan, we can still use that spouse's income to help them qualify because, of course, if you have two people living in a house and they're both working, they're probably both gonna be making the mortgage payment, right? Of course, we get that, logically, that makes sense. But if your spouse can't be on the mortgage because their credit score isn't good enough, we also can't use their income to help you qualify. We only use the income for the people that are on the mortgage to help qualify for that mortgage payment. So I know sometimes people come to me and they're like, what if I write a letter, or my spouse writes a letter saying they're gonna help me? I'm like, well, that's cool. I'm glad you have a spouse that's willing to help you with the mortgage payment, but we actually can't use it to help you qualify. Sorry. You both have to be on the loan if we're using both of your income. So moral of the story is, does your spouse have to be on the loan? Absolutely not. If you're getting an FHA loan and your spouse isn't on the loan, do we have to look at their debt? Yes, we do. And 3, yes, you can still buy a house without your spouse. They do not have to be on there, totally your choice. But if they're not on there, we're not using their income. Say you need to add them on. How can we fix your spouse's credit? Come see me. I will work up a credit plan for free for you. I have all sorts of credit simulators I can run for them. I can help them get their credit in line. But here's a few common things that they can do. They can dispute some of their collections. If there's errors, let's get those taken off the credit. If you have credit cards that are maxed out, let's pay them down. Pay all of your credit cards down to where you only owe 30% of your credit limit. Those are the 2 fastest ways that we see people build their credit. I'm Amanda Ray with Guild Mortgage. Please let me know if you have any more questions about buying a house without your spouse.